The last 6 months have not been very easy, to be honest, with some banking issues in the US. The exit of the COVID is globally positive, I think, but the inflation in some countries is still quite active, in particular food inflation in Europe. After the energy inflation, we see the food inflation. China is exiting, but of course it's lower than everybody was dreaming. So I think it's a question of, so anticipation, in fact. But fundamentally, I think, yes, the perspectives are quite good. In fact, we must be optimistic, after what we experienced in the last 3 years, it can be better, But it's true that you have a big change for me in the macro, of course, is the interest rate hike. We change a lot because we go from a world with money has no value, free money, to something which is worth 5%. It makes a big difference. So I think we need to accustom ourselves to the old times, higher interest and inflation. So let's come back to basic economics.
What about within the context of the oil and the energy markets? The Aramco CEO, Nasser, told me earlier today that recession fears are basically keeping a lid on prices for now, but Chinese demand will improve. What's your view?
My view is that everybody complains, but the price is at $75 per barrel, which in fact is quite good, in fact. And I think if we could stabilize it in a range of 70, 80, I think it will be good for producers and customers, So we should not forget, okay, it's lower than last year, 100 plus, but it was too high. By the way, consumers were complaining everywhere. European governments had to subsidize gasoline price. So I think it's better globally to be in that range, first comment. Second, yes, the demand could be, there is some spare demand coming back. China is not yet at full capacity. Airlines, plane industry not yet as well. The jet fuel market not yet at the same level. And OPEC is doing quite well, in fact, to monitor which is the supply side. So it's true that all that is in a global market where you see this, what we described before, higher inflation, higher interest rate, some issues on the banking system. So you have a sort of global bearish mood, but fundamentally on the oil market, if IEA is right, and we expect an increase of demand up to 102 million barrels per day, then that means that we need to continue to produce if we don't want the price to go too high.
So what is the sweet spot for TotalEnergies, and how is the current pricing environment and landscape impacting your investment decisions?
We are very safe. Break-even of TotalEnergies is at $25 per barrel, 50 for dividend, and we invest with a benchmark of $50 per barrel. So why? Because we never know what could happen. So at $75 per barrel plus, which is very important for TotalEnergies, a gas price which is in Europe above $10 per million BTU, 10 to 15. We are our largest exporter of LNG from the US. It's a very good environment. So I am in a comfortable position as a CEO to maneuver the company and to build a strategy for the future.